The volume-weighted average price, or VWAP, is a trading indicator that provides traders with the average price at which a stock or asset has traded throughout a given trading period, weighted by trading volume. VWAP is widely used by traders, including day traders, institutional traders, and swing traders, as it helps determine market direction, entry and exit points, and overall trading efficiency. VWAP serves as a benchmark for evaluating the execution quality of trades. Traders use VWAP to determine whether their orders are executed at favorable or unfavorable prices relative to the market's average price during the trading session. Executing trades near or better than the VWAP is generally considered advantageous and reflective of effective trade execution. VWAP is critical for traders for several key reasons: market sentiment and trend identification. VWAP helps traders gauge overall market sentiment and identify market trends. When prices are trading above the VWAP, it typically indicates bullish sentiment and upward momentum. Conversely, prices trading below VWAP generally signal bearish sentiment and downward momentum. Trade execution. Benchmark institutional traders extensively use VWAP as a benchmark for trade execution quality. By comparing actual execution prices to VWAP, traders can objectively assess performance and ensure trades are executed efficiently. Support and resistance levels. VWAP often acts as dynamic support or resistance throughout the trading day. Traders strategically utilize VWAP to identify potential price reversal points, manage entries and exits, and set stop-loss orders effectively. Effectively incorporating VWAP into trading strategies enables traders to optimize entries and exits, manage risk proactively, and improve overall trading performance. By systematically using VWAP as a central reference point for price analysis and execution evaluation, traders confidently navigate market conditions, capitalize on trading opportunities, and consistently achieve profitable outcomes. Let's dive in. Accurately calculating and interpreting the volume-weighted average price, or VWAP, enables traders to strategically identify market trends, determine entry and exit points, and optimize trade execution quality. Understanding VWAP calculation methodology and practical interpretation really enhances traders' decision-making and risk management capabilities. VWAP is calculated using the following formula. VWAP equals cumulative price times volume divided by cumulative volume. Here's the step-by-step method to calculate VWAP. First, calculate the typical price. You want to determine the typical price for each period, commonly each minute. Calculated as typical price equals high plus low plus close divided by 3. Next, multiply the typical price by the volume traded during each specific period. Third, cumulatively sum the values. Accumulate the values calculated in step 2 throughout the trading day. Fourth, divide by cumulative volume. You'll divide the cumulative sum from step 3 by the cumulative volume of all periods. This calculation produces a continuously updated VWAP throughout the trading session, providing traders with real-time insights into the market's average traded price weighted by volume. Traders interpret VWAP in various ways to identify market conditions, manage trading activities, and optimize execution. When it comes to trend identification, prices trading consistently above VWAP suggest a bullish market sentiment and upward trend momentum. On the other hand, prices trading consistently below VWAP indicate bearish market sentiment and downward trend momentum. Market strength and weakness can be seen when there are significant deviations from VWAP, which can indicate strong bullish or bearish momentum. And when price is consistently reverting toward VWAP, it reflects balanced market conditions and potential consolidation. For trade execution, traders aim to execute buy orders below or near VWAP and sell orders above or near VWAP, ensuring favorable execution quality relative to market conditions. So, VWAP frequently acts as dynamic support and resistance throughout the trading session. When prices approach VWAP from above, VWAP can act as a support level, potentially prompting price reversals or stabilization. Now, when prices approach VWAP from below, it often serves as a resistance level influencing price reversals or consolidations. Traders strategically utilize VWAP levels to identify precise entry and exit points, optimize stop-loss placements, and manage trades effectively. Accurately calculating and effectively interpreting VWAP significantly enhances traders' market analysis capabilities, strategic decision-making, and trade execution efficiency. By systematically leveraging VWAP insights, traders confidently navigate market dynamics, strategically manage trades, and consistently achieve profitable trading outcomes. Effectively leveraging the volume-weighted average price, or VWAP, involves applying tailored trading strategies suited for both intraday and swing trading approaches. Utilizing VWAP strategically enables traders to optimize trade entries, exits, and risk management, helping them capitalize on market opportunities and, honestly, enhance profitability. Intraday traders extensively use VWAP for real-time decision-making, capitalizing on short-term price movements and intraday trends. VWAP cross-trading, for example, here's a common bullish entry. Traders enter long positions when prices cross above VWAP, signaling potential upward momentum. Bearish entry traders initiate short positions when prices cross below VWAP, indicating potential downward momentum. Mean reversion trades, well, they're pretty interesting. In a bullish mean reversion, traders buy when prices significantly dip below the VWAP, expecting that price will eventually revert back toward the VWAP. Now, in a bearish mean reversion, traders short sell when prices notably exceed the VWAP, anticipating the price will revert back toward the VWAP. Intraday traders, will systematically use tight stop-loss orders around VWAP levels, effectively managing their risk exposure and preserving their capital. Swing traders also use VWAP for analyzing those medium-term trends, managing multi-day positions, and strategically positioning their trades. For a bullish swing entry, traders enter positions when price stabilizes above the VWAP, which indicates, a sustained bullish sentiment. Alright, so when it comes to a bearish swing entry, traders usually initiate positions when the price is consistently trading below the VWAP. This kind of setup signals bearish market dynamics, and it can be a strong indicator for those looking to go short. Now, let's talk about swing trade management. By trailing the VWAP, traders manage their open positions by systematically adjusting stop-loss placements to align with VWAP levels. This approach really helps ensure trade management stays consistent throughout the trade. Finally, when it comes to profit-taking, traders will strategically take profits as prices significantly deviate from the VWAP. This is how they secure gains and, at the same time, manage position risks effectively. Alright, let's look at some real-world examples of VWAP strategies. So in this intraday example, the price initially trades below VWAP, but later crosses above it, which can signal potential bullish momentum. Traders often enter long positions once that VWAP cross is confirmed, and they'll strategically place stop-loss orders just below the VWAP. As the price continues higher throughout the trading session, traders are able to secure profits by systematically trailing their stops using the VWAP. Now let's talk about a swing trading example. Here, traders spot a stock that's consistently trading above its VWAP over multiple sessions, which indicates a bullish sentiment. They enter long positions and set their initial stop-loss orders below the recent VWAP support. As the VWAP trends upward, traders manage their positions by adjusting those stop-loss placements, which really helps optimize profit potential while effectively managing downside risks. When it comes to risk management with VWAP strategies, effective VWAP trading always incorporates disciplined risk management practices. Position sizing is key, so you want to adjust your trade sizes based on the strength of the VWAP signal and the overall market volatility. This way, you can maintain disciplined risk exposure and honestly, trade a lot smarter. So, systematic stop-loss placement means, clearly setting your stop-losses at strategic VWAP levels. This really ensures your risk management is right on target and honestly helps preserve your capital. Strategically applying VWAP trading strategies for both intraday and swing trading can, without a doubt, enhance your ability to spot the best entry and exit points, take advantage of market trends, and manage your risks in a proactive way. By systematically using VWAP insights, traders are able to navigate market conditions with more confidence, optimize their trading outcomes, and importantly, achieve consistent and sustainable profitability. Advanced VWAP techniques, including things like anchored VWAP and multi-day VWAP, give traders, enhanced analytical capabilities. This allows for more precise market analysis, better trade management, and of course, optimized profitability. Anchored VWAP involves starting the VWAP calculation from a specific event or significant price level rather than the start of the trading session. Traders anchor VWAP calculations at key market events such as earnings announcements, significant news events, or price breakout points, providing customized insights into market behavior from those points forward. Practical applications of anchored VWAP include event-based analysis. Traders anchor VWAP at earnings reports or significant market-moving news to analyze subsequent market behavior and sentiment shifts. Technical level anchoring means anchoring VWAP at major support or resistance levels. This allows traders to evaluate market response and confirm breakout or reversal validity. So, here's an example scenario. After a significant earnings report, traders will anchor VWAP at the report date and then analyze how the price behaves in relation to that anchored VWAP level. If trading consistently stays above this level, it signals bullish sentiment and ongoing strength, which honestly gives traders more confidence in maintaining their long positions. Multi-day VWAP, well, it aggregates price and volume data over multiple trading sessions. This offers traders some pretty valuable insights into broader market trends and highlights significant price levels over longer periods. Now let's talk about the practical applications of multi-day VWAP. For trend analysis, traders use multi-day VWAP to identify and confirm multi-day or even weekly trends. This really helps them get a clear understanding of market direction and sentiment. Multi-day VWAP often acts as a robust support or resistance level, guiding traders in managing trade entries, exits, and risk management. Example scenario. Traders monitor a stock consistently trading above its multi-day VWAP, signaling sustained bullish momentum and market strength. Traders strategically position trades by entering on pullbacks to the multi-day VWAP level, managing risk through disciplined stop-loss placements below this critical support. Traders often strategically combine anchored and multi-day VWAP analyses to enhance market insights and trading precision. Comprehensive analysis. Traders anchor VWAP at specific events while simultaneously evaluating multi-day VWAP to gain comprehensive insights into both short-term reactions and broader market sentiment. So when we talk about strategic trade execution, combining these advanced VWAP techniques really enhances your trade timing accuracy. This approach robustly validates your trade setups, entries, and exits, making your decisions a whole lot more reliable. Now, when it comes to risk management in advanced VWAP trading, it's important to remember that these techniques require disciplined risk management practices. For position sizing, you want to strategically size your positions based on the clarity and strength of those anchored and multi-day VWAP signals. And lastly, let's talk about systematic stop-loss placement. You should clearly set your stop losses relative to critical VWAP levels, like anchored VWAP points or multi-day VWAP supports. This ensures your risk management stays precise and disciplined, and honestly, that's absolutely key for long-term trading success. So, by incorporating advanced VWAP techniques like anchored VWAP and multi-day VWAP, traders can really enhance their analytical precision, trade management effectiveness, and honestly, overall profitability. When you systematically apply these sophisticated methods, you're able to confidently navigate complex market dynamics, optimize your trading outcomes, and achieve consistent and sustainable trading success. Effectively incorporating comprehensive risk management practices into your VWAP-based trading strategies can, without a doubt, enhance your ability to manage risks proactively, preserve your trading capital, and achieve sustainable long-term profitability. By employing disciplined risk controls that are tailored specifically for VWAP trading, you ensure optimized trading outcomes and maintain strategic consistency. Strategic position sizing is all about accurately determining your trade sizes based on your account size, risk tolerance, and the clarity of VWAP signals. This is fundamental for effective risk management in VWAP trading. Traders systematically limit their risk exposure per trade, adjusting position sizes according to the strength of VWAP signals and, of course, market volatility. Conservative position sizing during periods of market uncertainty or, when VWAP signals are a bit unclear, helps traders manage potential risks effectively. Systematic stop-loss placement is really important. Effectively placing stop-loss orders at precise VWAP-related levels can significantly limit downside risks and preserve your trading capital. Traders often set stop-losses just a bit below VWAP support levels for bullish trades or above VWAP resistance levels for bearish trades. Continuous monitoring and adjustment is crucial. Regularly keeping an eye on your VWAP-based trading strategies, evaluating real-time performance, and proactively making adjustments is essential for comprehensive risk management. Traders continuously refine and tweak their strategies based on ongoing performance insights, changing market dynamics, and evolving VWAP levels. Proactive adjustments like modifying position sizes, updating stop-loss levels, or even altering strategy parameters help maintain strategic alignment with current market conditions. So, let's talk about some common mistakes to avoid. One of the biggest is over-reliance on VWAP alone. You really want to avoid relying exclusively on VWAP signals without considering broader market analysis, technical confirmations, or, even the fundamental context. Traders should incorporate comprehensive market evaluation to validate VWAP signals robustly. Another pitfall is ignoring VWAP deviations. Traders must avoid disregarding significant deviations from VWAP, since these can indicate strong momentum or potential market reversals. Proper evaluation of such deviations ensures accurate interpretation and, honestly, more strategic trade adjustments. And finally, neglecting risk controls can be a costly mistake. Consistently applying disciplined risk management practices is absolutely critical. Neglecting stop-loss placements, position sizing discipline, or continuous strategy evaluation significantly increases risks and potential losses. So let's talk about practical tips for effective VWAP risk management. First off, maintain diversification. You really want to avoid excessive concentration in a single trade or market segment. That way, you can ensure balanced exposure and reduced volatility. Also, it's important to use VWAP in conjunction with other indicators. By combining VWAP insights with complementary indicators, you can enhance your analytical robustness and, honestly, boost your trading confidence. It's important to, systematically review historical VWAP performance to identify trends, validate your strategies, and optimize future trade execution. Implementing comprehensive risk management practices, especially those tailored for VWAP-based trading, really does enhance a trader's ability to manage risks proactively, preserve capital, and achieve consistent trading success. By strategically using disciplined position sizing, systematic stop-loss placements, continuous strategy monitoring, and making proactive adjustments, traders can confidently optimize their VWAP trading outcomes and, honestly, achieve sustained profitability. Hey, don't forget to like, subscribe, and share for more insightful trading strategies and tips. Just a quick disclaimer. The information provided in this video is for educational purposes only and does not constitute financial advice. Always make sure to perform your own research or consult a professional advisor before making any investment